Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So in today's video we are going to continue with the S&P 500 sectors. So we've already done two of those videos. We've done healthcare, so we looked at the healthcare sector. We picked 5 companies and we talked about it, and we also did the same thing with technologies. Right now with the technology sector, right now we're going to do it in industrials, and then we'll continue from there onwards. Like I said in that video, in the first video, I would like to do all 11 sectors and find only 5 different companies that we could potentially add to our portfolios. The whole idea is that you would look at this and say, okay, you know what, there's 5 great companies out there that in that industrial sector, and maybe this is my favorite, maybe this is the one I want to invest in, maybe this is the one I think has the best of financials and so on. So you go away and do your research, and then obviously if you're interested, then put your money to work and so on. But obviously, like I've always said to you guys, I'm not a financial advisor. I'm just here to kind of help you guys to see what's out there, and then you don't need to go away and do your own research. I own a lot of companies in my portfolios. Okay, there's a reason behind why I own these companies. You need to have your own reasons behind why you own these companies as well. That because I own something, it doesn't mean you can just straight away invest in it, because I do make mistakes. Okay, honestly, I'm telling you, I've made mistakes. Going back and watch some of my older videos, I made tons of mistakes. Okay, so and I'm learning from those mistakes. So but you need to make your own mistakes, especially it's your own hard-earned money. Okay, right, let's get started the video, because I'm going to try to keep this video very short. Like I said, we're looking at the industrial sector. This includes loads of different companies that sell loads of random weird products. Okay, I'm not going to go into the details of what the companies sell and so on. I'm going to give you the financials, and then hopefully you can go and do a little bit more research on that. Okay. Right, so the first one is the company that I own in my portfolio, and that's Union Pacific. This is one of those railroad companies. They transport goods from A to B, and that's how they make their money. They have a $119 billion market cap. They have a wide economic moat. Price is right now $196 per share. Dividend yield of 2.65. Latest dividend increase was 11%. Absolutely amazing. Above inflation, if you like. 5-year growth rate up 14%, payout ratio is 44%, dividend streaks 15 years of increasing that dividend, and safety is 88%, absolutely amazing. Profit margin almost 29%, free cash flow almost $6 billion, and total return in the last 10 years, we're looking at about 14%. Let me go back to free cash flow, because this is something I keep saying, but free cash flow is genuinely the king here. You need to buy companies that have an excellent free cash flow. Like I was talking to one of my close friends. I haven't seen him in age. We were talking about a few things, and we were talking about basically arguing about crypto and where it is right now, blah blah blah, and then NFTs and all the fact that all of these things are dead. No, they're not dead. This and that. And then it got to a point where he was a bit frustrated with me, because I was just saying, why didn't you just buy stocks? Why didn't you buy it? And he was like, no, I bought stocks and I'm down £60,000. I'm like, what? So I knew it previously, and I think I talked about him a long time ago. He said about, I think it was 16,000, 20,000. I can't remember, he was down. But right now, £60,000 down on not penny stocks, but stocks that he thought would go to the moon, and they haven't gone to the moon, and he's down quite a bit. And he's like, okay, I'm going to hold on to it, but he's basically losing money right now. Okay, unless obviously until he sells, he's not gonna. So I said to him, okay, have you look at the financials of these companies? Do you have a free cash flow, all of that stuff? And some of them are dead. Some honestly, when you look at their financials, there's nothing there at all, right? So this is why I keep saying to you guys, free cash flow is really important. You've got $6 billion in the bank. What can you do? You can pay that dividend. You can buy back your own shares. You can pay off basically some of the debt. You can actually acquire other businesses to increase your revenue and so on. You could do a lot of things with that, okay? And that's why it's really important. 14% total return in the last 10 years. Growth estimate for the next 5 years is 11%. Morningstar will basically say it's fairly valued right now, and $203 per share is where it should be. Right now, we're looking at about 196 if you like. The next company we're looking at, another one that's in my portfolio, that's UPS. Okay, the company that transport basically parcels, whatever, from A to B and so on. $145 billion market cap, wide economic moat, $166 per share right now. Dividend yield 3.65, which is absolutely amazing. Only for almost 50% increase in the latest one. I don't think that's sustainable. I don't think they're going to keep doing that every single year, but at least it's there for now. 5-year growth rate, we're looking about 6%. Payout ratio, 40%. Dividend is basically, they have increased that dividend for 12 years. Safety, almost 70%, which is good. Profit margin, almost about 11%. Free cash flow of almost $11 billion, and total return in the last 10 years, we're looking about 11%. Growth estimate in the next 5 years, earnings wise, we're expecting 5% and 10% discount right now, according to Morningstar. $186 per share is where it should be. Right now, we're looking about 168. So it needs to go up about $20 more to actually hit the fair value at the moment. So it's kind of discounted a little bit. I'm still buying more. I want to add two more shares. I think I've got 17 point something shares. I want to make it 20 and leave it alone for a while. Okay, the next company we're looking at is Waste Management. This is the garbage company that got your garbage in the US and whatever. I think US and Canada, or just US, I don't know, somewhere in North America anyway. And what do? They actually recycle it. They do a lot of things with that. $67 billion market cap. It has a wide economic mode. $158 per share. Dividend 1.64. Latest dividend increase was 13%, which is absolutely amazing. 5-year growth rate 7%. Payout ratio only 47. Dividend streaks basically 18 years of increasing that dividend. 74% safety. Profit margin 11%. Free cash flow $2.2 billion. 18.87% in terms of the 10-year total return. Growth estimates in the next 5 years about 15%. This is why this company is basically trading higher premiums, because everyone is kind of expecting this company to go up, and it is going up. Because when I think I bought it, it was when 120s, and then it kept going up and up and up, and then I sold it and I thought, you know what, it's gonna have to come back down. It never came back down. I really would love to own this company in my portfolio. It's got predictable income, right? Predictable business, and that's what I love. But right now it seems just too expensive. 27 premium, 128. When I sold it, I think it was about 140s, 150s, and then it kept going up. So I took a little bit of profit off the table, but ideally I would have loved to own it. And the next one is a 3M. 3M is one of those companies I own in my portfolio. Down a lot right now because of legal situations that's going on right now. I don't know when it's going to disappear anytime soon, but right now I actually own quite a bit of this company. I'm going to keep it there. I'm going to dollar cost average, bring it down my total average, because right now it's 122. I think my average is like 150, 160s. So I'm going to bring that down hopefully and see how it goes. But yeah, if you don't own it right now, maybe we need to wait until and to see what happens to basically with that legal situation. I wouldn't buy it right now. I'll be honest with you. I'm only dollar cost averaging, but bringing it down my average, because I think that it will be better in strategy for me than actually selling the stock or anything like that. I want to see how it goes. This legal situations might take about a year. It might take 2 years. I have no idea. But right now I own this stock. I'm going to bring it down my total average. If you don't own it, you might want, and you want to sleep well at night, you might want to look around other companies. Okay, it has wide economic mode, $122 per share. Dividend yield 4.85%. That is very high. When I bought this company for the first time, I think it was about 3% or even less than that. No, it was 3%. Right now you're looking at almost 5%. Dividend latest increase was 1%. So this is what they have been doing. They haven't been increasing their dividend a lot. They just increased that 1% every single year to keep basically this 63-year dividend is basically growth streak, right? 6% in terms of the 5-year growth rate. Payout ratios 60%, which is absolutely fine. Safety 75%. Profit margin almost 12%. Free cash flow $4.3 billion. Total return in the last 10 years almost 7%. And then the next 4 years they're expecting 4%. Next 5 years they're expecting 4% growth in terms of earnings. 35% discounted right now. 183 is where it should be. Right now is 122. Now, I'll be honest with you, yes, I do own the company and I'm going to own it for a while. Okay, it's not a dead company, but it's just that little bit of risk, uncertainty. You're better off buying something else and wait for it. And if you don't own it, if you own it and you want to keep it, there's no issues. For me anyway, that's what I'm doing. So that's it. The final company is another one that I own in my portfolio. Cummins, this company, it actually deals with engine, what is it called, diesel engines, and they're actually trying to diversify now in that portfolio. They have great business model, have been around for hundreds of years, and yeah, they've got absolutely predictable business as well. They have a narrow economic moat, and then $32 billion market cap, so it's not a huge company either. Price right now is $238 per share. Dividend yield of 2.6. Latest one increase was 8%. 5-year is 7%. Payout ratio 38%, and dividend streaks of 16 years paying that. 98% safety wise. Profit margin 8%. Free cash flow $1.2 billion. That's enough to cover the dividend and so on. Total return in the last 10 years, we're looking about almost 12%, and then 8% growth every single year in the next 5 years. And then fairly value right now $241 per share. Right now is $238 per share. I own 4 out of the 5 companies I mentioned here. So let me show you the other companies that are included in this ETF that you can find out through Vanguard. When you look at the industrials, they have everything from airlines to logistics to construction, engineering, the heavy electronic equipment, railroads, all of these things. Okay, so they've got so many, and if the economy is doing well, these companies tend to do well. And that's one thing you need to understand. They're very cyclical sometimes. So as you can see, Union Pacific, for the Vanguard one, Union Pacific is the first one. The Raytheon, obviously the technologies. This is one of those weapons or whatever the companies or airlines or whatever they are. UPS, Honeywell, Deere, for example, is one of the. Lockheed Martin is one of those companies. Caterpillar. None of these companies are Sharia compliant. That's why I left them. Again, weapons. Again, General Electric or GE, Boeing. So there's a lot of great companies out there, but they are not Sharia compliant. But the ones that are, West Management, 3M, for example, this company as well, CSX was the railroad company, Illinois Tool Works. Yesterday I actually watched their latest earnings. They actually done quite good. What else have you got? Emerson Electric is actually quite good company. They have loads of mad businesses, but it's very difficult to get your head around there. They have so many different businesses that kind of, they touch every single industry. So they can be technology company, they can be, yeah, it's a bit confusing. I used to own it, sold it. FedEx is again, and their Uber, for whatever reason, is in there too. So yeah, you've got loads of different companies in there. So you can look at this and find the ones that are Sharia compliant that you would really like. I actually like Parker Hannifin. Maybe I should have included that instead of some of the other companies. But yeah, there you go. Companies are also in there. So yeah, that is the ETF that I looked at in order to put this together for you. So if you are interested and trying to find maybe 1 or 2 industrial companies, have a look at these companies, do your research, and then obviously if you're happy with the financials, then maybe just add to your portfolios and so whatever you want to do with it. Right? So the portfolio is doing okay. The basically is still going up and down. I actually added some money and I got some dividends that I got paid. I think it was Cisco. But yeah, so I've got 266 pounds in there. I'm not sure what I'm going to do with it. I probably will buy more RB because it's actually down a little bit. Yesterday was actually down. Oh, it's up today. Yesterday was down about 4 or 5%. So I might actually buy a little bit of this company. The other company actually I'm planning to add to is UPS and possibly S&P Global in the next couple of days. So we'll see how that goes, inshallah, overall. Anyway, I'm going to stop there. Have a wonderful day. Please, if you haven't liked the video already and you haven't subscribed to the channel, please do it, because it really genuinely helps. If you asked me a question recently, I haven't had the chance to look at it. I've just been planning to put these videos out there. Please like the video, subscribe to the channel. Let me know if you have any questions, and I will try to answer your questions, inshallah, over the weekend once I'm feeling a little bit better. Assalamu Alaikum.